Welcome back to the Bitcoin price update. I've had several people asking for an update on the Bitcoin price. And last week I was taking my youngest off to college. So it's about 6 hours, 6.5 hours away from me. So busy week last week. And I wanted to do an update this weekend because we have had a little bit of price action, some interesting movement in the Bitcoin price, especially the altcoins. The altcoins have had a big week. So let's take a look at what's going on and talk about what is happening out there with Bitcoin and some of the observations that I've made over the past week. Even though I was gone, I'm still watching it, keeping up with it. Interesting time, especially with altcoins. I had a little bit of fun with some altcoins. I had the Cardano play. I didn't do anything with Solana, but I did do Cardano, and I had a little bit of fun with Ethereum over the last couple of weeks. And the whole buy the rumor, sell the news type of stuff. Let's take a look at Cardano. Cardano had a nice little run here over the last number of days here, going back to, excuse me, going back to about the 17th of August, but even still all the way back to July. So this whole thing started back in July. Most of the runs in the altcoins right around that 20th of July timeframe. That's kind of where the launch pad started for a lot of them. And if you look at the charts with these coins, it's really interesting to see how they compare and to look for any similarities in them. And there's Cardano. And again, Cardano made that announcement that they were going to start having smart contracts. So that's the kind of news that's going to drive the price. The announcement came in on a Friday a couple of weeks ago, or a week or so ago, Friday before last, and price just skyrocketed. So I had some fun with that. I jumped into Cardano right around that $1.70 range, and then I rode that one up and sold, waiting for a little bit of a pullback. And then we'll probably get another big bounce when the smart contracts actually implement and we see that they do work. Ethereum kind of had the same run. Again, back to that 20th of July, off to the races. Kind of a altcoin season, and we've had a few that have spiked more than others. And as you can see, pretty much all of the charts are looking the same all the way down through. Even good old Dogecoin got in on the action as well. Dogecoin jumped quite a bit, not as much as others, but it still had a nice little run. And some of these had even more upside than others. Solana went on a big run. Avalanche went on a big run. IOTA is interesting. I don't know what this coin is, IoT, but that thing had a nice little spike. Went from about 2 cents all the way up to 15 cents. And then of course, when something spikes like that, it's going to pull back pretty quick. So it's kind of bouncing around now, trying to figure itself out. But on the Bitcoin price, of course, a lot of things are hinging and following Bitcoin. Bitcoin again started its major run back there in July from 29,000 off to the races. Now, something that's interesting to notice about these charts, and especially in the Bitcoin chart, what's really fascinating here, and a lot of people have seen the Wyckoff distribution model with that little area in a spring. What's really interesting, and I'll pull that up while we're working on this as well, because there's lots of little distribution patterns there for Wyckoff, and we can look at some images here. And especially this little area here that a lot of people have really been focusing on, with this little drop bouncing around and then the spring. So let's go back to Bitcoin, and we see that we've had this little area of consolidation. We dropped down, and then we had that spring. So what's really interesting about this whole scenario here is when you look at the hourly and the daily, they're almost identical in the patterns. Look at that little pattern. You had that little bit of a drop, a little bit of consolidation, a little bit of a spike there on the hourly and the daily. Really interesting price action. So it just shows you, like we've been talking about all along, that this is a organized, automated, institutional level price action that we're seeing here, and the candle patterns are tracking that price action. So let's talk about what are they doing and why. And I've showed you how all the charts look pretty much the same. We're looking at dailies here. There's Bitcoin since the initial drop that we had in the market going down. So what's going on here? So we had, obviously, in an uptrend, what we've talked about is, higher highs and higher lows. So how do you know you're in an uptrend? You're setting higher highs and you're setting higher lows. You're going to get a spike with a pullback, spike with a pullback, spike with a pullback. And as long as the highs are higher than the last high and the lows are higher than the last low, you're in good shape. So where do you start to recognize that you may have a problem? When it drops and you put in a lower low. So that kind of raises a little bit of a red flag there. We have a lower low. This is the initial sell-off here in April timeframe of 2021. And then we bounced and we had a lower high. So that's your indicator right there that the trend is reversing. So that's where you want to be on the lookout. Then that's when we had the big sell-off in May of 2021. And we had a little bit of price action here, caught a lot of people off guard, took a lot of people by surprise. And then we bounced around here and you can see these big spikes. So a lot of this is retail institution driven, just trying to figure out what's going on here. And you can see that as price is unable to sustain itself, you see these big spikes. These are the institutions popping it back up because of their entry points. They accumulated all back along here, marked up and distributed along the top. And we talked about this Wyckoff distribution until price ultimately dropped back down again for another accumulation phase. So this is a little bit of that accumulation phase, marking up, marking down, stopping out the shorts, liquidating the longs. So we had a lot of that going on with the spikes and the institutions bringing price back up. But the problem is whenever they brought price back up, it was not able to be sustained by retail or other investors. So they have to keep bringing it back up. And then as you see, price was dribbling off. Now, here's what's interesting. And this is where I now think that our macro market cycle bottom is potentially in at 30,000. And I'm not saying that it's absolutely the bottom. As we know, with any black swan event, if we get a market accident, we're going to talk about traditional markets here in a minute, that anything can happen, just like we had back in March of 2020 with the pandemic. And that big sell-off, we went to some pretty low lows there. But if the general market conditions remain and all of the bullish indicators and macro news and fundamentals remain strong, we should not go below that $28,000, $29,000 level again. I know a lot of people are calling for less than that. And at this point in the market, it certainly looked like we were heading lower until the institution stepped in and spiked it. So why did they do that? Because they had a lot of accumulation up here and they did not want to let it go any lower. They wanted to go ahead and start bringing price back up so they could generate some profits. Now, the other thing that's going on during this time frame here is traditional markets are reaching a point of diminishing returns. So there's a lot more liquidity and a lot more profitability in crypto markets right now versus traditional markets. And the traditional markets all know that coming this fall, September, October, the party is over and the Fed is going to have to start making some moves. And we're going to talk about that again in a minute. But one last thing I want you to take a look at here before we move on to talking about fundamentals and the Fed is patterns and price action. Patterns are important in crypto. They're important, especially in Bitcoin. And what I'm seeing that looks really similar. So you always need to be prepared for all situations, right? So we're going to talk about levels and price action. We're at that 49,000 level. We've been ranging initially in that 35 to 40, 30 to 40 range. Then we dropped down into that 28 to 35 range. And now we've stepped it up. We were in that 37, 40 range. Then we stepped it up to that 40 to 45. And now we're in that 45 to 50 range. So this is all ranging price discovery, trying to figure out the future of the market. So what's interesting to me is the patterns of Bitcoin. So if you look at this rise along the top here, we had a higher high, then we had a higher low, higher high, higher low, all the way across until this point where we put in that lower low and that lower high. We're seeing almost identical pattern right here in this current run. We are seeing where we've come off the bottom, where we reverse trend, we put in a higher, well, it's a lower high, obviously. And these are all lower highs. And why do I say lower highs? Because you are still in a downtrending market. We've reversed the trend, but we have not crossed that $65,000 level. Until you cross, well, the spike was to 64.8. Until you cross that and you put in a close above 64.879, you might as well say 65. Everything below that is still a lower high. So until you cross that level, you have not put in a higher high. Now you can put in higher lows because your last low was right here, 28,000, whatever that wick down was, 29,000, 28.9, somewhere around there. That's your lower low right now. So anything above that is a higher low. Now, in terms of trending markets and reversals, and as I said, what we've seen over there is for an uptrending market. So now we've reversed the trend in a downtrending market to an uptrend. So it's a macro downtrend, and we have a micro uptrend within the overall trend of the market. And again, until you cross 65, you're still kind of on a down. You're putting in lower highs. So that's what I mean by downtrending. Not necessarily that this is a downtrend, obviously. So we're putting in a lower high here, lower high, and potentially another lower high here. And looking at the other side of the mountain over there, this is kind of how we came up. And as long as we're putting in a high higher than this last high and a low higher than this last low, and we barely made it there, we have a lower high or higher low, and we barely put in a higher low here. But we want to keep that higher low in place in order for this trend to continue with upward momentum. How do you know that we could see a reversal? Is if you put in a lower high lower than the last high, always look left. If this closes down lower than this last high, which is around 47.9, we have to keep closing above that. If we close below 47.9, you have another lower high. And then if it comes back and closes below 44.5, then you're going to put in a lower low. And that's when you know, if you get a lower high and a lower low, then you know the trend has reversed. And as long as that continues down in that direction, then you can expect downtrending price action. And you need to always be prepared for every scenario. So right here, you need to be prepared for a reversal. If the market reverses, what am I going to do? And at what price point am I going to do it? Am I going to wait till 46, 44? As you look at these lower thresholds, 37, or you're going to ride it all the way through and just hold and never sell. So if you're looking for a liquidation point, you need to always be prepared. Where are your liquidation points going up? Where are your liquidation points going down? And if you're holding, and none of it really matters. So those are the things that you want to look at. And from an investment standpoint, I'm an opportunistic investor. I look for value everywhere in every market, whether it's crypto, whether it's stocks, whether it's real estate, businesses. You always need to have your exit strategy in place. And if you're long-term, you're long-term. And, it doesn't really matter. But let's get on the hourly here, because Bitcoin is trying to bust through 49,000. And that's the question of the day. Can we break 49,000? Can we get to 50,000? And what is going to happen after that? So as we're bouncing around here, we are wicking right on up to, let's get rid of this right here. We are wicking right on up so far to 49,481. We are dancing around trying to test it. If we bust through 50,000, then we're looking at that 52 to 54 range before we can look at any kind of potential reversal in terms of where potential resistance could come in. What is support? What is resistance? So support is buyers, resistance is sellers, right? So at these levels, a lot of people are looking to liquidate because maybe they're in at 45, 50,000 or 35, 40,000. They're looking, hey, as long as I get close to 50, I'm selling. That's your resistance. That's where your sellers are. Your support is your buyers. That's where your buyers step in and say, hey, I'm a buyer at this price point. So these spikes right here, the reason these spikes are happening is because there's not a lot of buying interest. So there wasn't any interest here, and it looked like we were potentially going lower. So the institutions pumped. Not a whole lot of interest. Pump. Not a whole lot of interest. Let's pump it again. Not a whole lot of interest. Also, liquidating shorts. And then not a lot of interest here. So let's spike it up, see if we can generate some interest and liquidate shorts along the way, because everybody's shorting this thing along the way because of the macro cycle in the market, looking for that downward price action. So it's really kind of interesting that somebody would short with this uptrend in the current market cycle right now to a big degree. And of course, there's people that are trading on time frames and things like that with longs and shorts. That's not me. I'm a swing trader. I take bigger moves like we had in Cardano from that price point down around $1.67, $1.69, somewhere in that area, all the way up. And as you see, we have a little bit of pullback there from 250 back down to that 240. We'll see where that settles in once the news comes out about smart contracts in September actually happening. So right now we're looking at that 50,000 test. If we can get above 50 and close above 50, then you can expect the trend to continue. If we get up into the 50, 52 and immediately get rejection and start closing back down below at 48, 47,000 level, or if we don't make it and we continue down from here, then the trend, this could all turn out to be just a big fake out and the trend could continue down for a little while. But the good news is right now, it doesn't look like if we do get a trend reversal that we're going to get below 28 to 30,000 without a market accident again. And it looks like our trending up. Once we get above 65,000, then you can expect to see some new all-time highs put in. Of course, that would be an all-time high, but we're talking about a lot of people expecting 100,000 by the end of the year. We have to get above 65,000 in order to do that. And as we've seen with these big spikes, anything and everything is possible. And we could be potentially retracing this entire move all the way back up to that 59, 60,000 level. That's really your big hurdle right there. Because as you see, what we've really done is we've retraced this entire downtrend from this point right here, our first big price drop, where we repeated that drop down to 49,000. That's our big resistance level that runs all the way across this entire shoulder line, neckline of this head and shoulders. So in the overall macro trend. So that's kind of what we're looking at now, retracing this whole move. We've retraced it all the way back up to 49. We got to get above there, 50 to 52. The real question is, can it happen this weekend? So a lot of the hedge funds and institutions do have weekend desks. So they are trading around the clock with traders all over the world. So that's why weekends have become more and more important. Obviously, your biggest volumes are coming in on the weekdays, but weekends can be interesting as well. And as you've seen the last couple of Sundays and last couple of weekends, we've had a lot of big price movement, mostly to the upside. We've seen a lot of big spikes on the weekends. And so we could continue to see this trend move forward. So what's going on in the news? So the biggest thing to watch is the Federal Reserve in Jackson Hole. They're meeting this week to start talking about taper. And you've seen the markets kind of settle in a little bit this week. And we've seen a little bit of selling in the markets this week in anticipation of the Fed saying, yes, we're going to start tapering. What does that mean? They're going to taper back their bond purchase program. It doesn't mean they're going to completely stop. It just means that now there's more and more support and more dissent within the Fed that says, look, we need to pull the foot off the gas. And what I mentioned is, as we get into September and October of this year, what we need to be aware of is what's happened in the past in the fall in September and October and what's happening this year. So with the pandemic, a lot of the support for the economy, for the labor force is stopping in September. So the unemployment benefits are stopping. So people are having to go back to work. We're seeing employment numbers increase. So one of the Fed's mandates is full employment. So as they see employment numbers go up, that gives them more cause to pull the foot off the gas and to let interest rates increase, to raise rates. And if you get the Fed tapering their bond purchase program now, we're going to see a little bit of selling in the markets. And if you see interest rates rise, you're going to see even more velocity of selling and more tapering of the markets and more pullback in the markets. And we'll take a look at that here in a second so that you can kind of identify what's going on there, because everything's code-related. Money is moving around from traditional markets into cryptos and back into traditional markets. So we're seeing a rotation, especially in crypto, because there's a lot more margin in crypto right now than there is in stocks. And there's less overall danger at the moment in cryptos than there is in stocks. As volatile as cryptos are, there's a lot of money to be made there right now for the institutions versus the stock market. So keep your eyes on the Fed's statements this week coming up and how the markets react and respond. Watch the dollar. As we know, generally when the dollar goes up and tops, Bitcoin bottoms. As the dollar goes down, bottoms, Bitcoin can top. So you want to kind of keep an eye on those types of things. And you want to keep an eye on how the markets react and the unemployment numbers as we get into September, because once we start reaching employment numbers, then the Fed will get the indications that markets are recovering, economy is starting to recover, the reopening trade is back on, that we're reopening, and they're going to start pulling back on some of their quantitative easing and their easy policy because they know the writing is on the wall. Now, the big key to watch there too is inflation. So we all know that inflation is real. It's global. We're seeing inflation that's transitory, but we're seeing inflation that's here to stay. So the Fed's going to have to respond to that. A lot of the data has not printed yet in the real inflation numbers, which is housing. Rents are up in this country and probably around the world. I mean, rents are up 10 to 20% in some areas in the United States over the last year. During the pandemic, housing costs have risen. Price of housing has risen. The cost to own and maintain housing has risen from taxes, insurance, maintenance, things like that. All of those costs have gone up exponentially. And then we're seeing the price at the pumps go up all across the world. We're seeing food costs increase everywhere. And of course, building materials are increasing. And with the infrastructure package being passed by the United States, we're going to see construction costs stay high and continue to go up in a lot of sectors for concrete, steel, things like that, that go into traditional infrastructure type products. So those are the things to watch that could potentially have an effect and an impact on the markets. And those are going to be your leading indicators for crypto. The problem with technical analysis, and again, I'm not an analyst, I'm not a technician, I'm not a chartist. A lot of those indicators are lagging indicators. So you want to look for leading indicators. And one of the best leading indicators for crypto is the traditional markets and the dollar. So that's where you can watch and prepare for what could potentially be coming. So let's get back to the Fed. So watch what the Fed says this week, and more importantly, watch what they do. And once they start implementing the taper of bond purchases, mortgage-backed securities, as well as treasuries and things like that, you're going to see the markets react. As soon as interest rates start going up in September with better job numbers, you're going to see the markets react. And then at the end of the day, the other thing that you want to watch is stock market accidents. The biggest stock market crashes, and I'm not saying that's going to happen, and I'll show you the difference here in a minute, but the biggest stock market crashes in the history of the United States have come in October. The 1929 crash, the 1987, I think it was 87 or somewhere around there. But some of the biggest crashes in the stock market have come in October, and some of the biggest bear markets have come through the October through the following year. So you want to keep an eye on that. There's a lot of things happening right now in the economy, in the world, globally, with Afghanistan, things like that, with China talking about invading Taiwan. So there's a lot of uncertainty out there, a lot of issues that could potentially affect traditional markets, which will bleed into cryptos. So keep your eyes on those things. That's going to be your leading indicator to what the markets are doing and how that could potentially impact crypto. So let's get back to what I was talking about in terms of corrections versus crashes. And when you look at traditional markets and you look at the Dow Jones, so let's look at the Dow Jones here over the last number of years, and you can see a lot of corrections, somewhere around that 5 to 10% range. Generally 10% is considered a good, healthy correction. We haven't had any big corrections in a while. The last one was in June, where we had, probably not even a 10% correction. We really only saw about 1,000-point difference in the Dow, which isn't much. 10% will be 3,000 points. So we haven't seen any major corrections in the Dow. We haven't seen any major corrections in the S&P. What these little bumps are when you see, 2, 3, 5% here and there, that's just profit taking. That's just healthy profit taking. And you might go back to October of 2020 and you see these little drops here in the S&P from 3,500 down to 3,200. That's about a 10% correction right there. But what does a crash look like? Let's go back here, and there's March. There's March of 2020 right there. That's what a crash looks like. These are corrections and profit taking. That's a crash. So that's how you know how to determine. There's your Dow Jones crash right there. That's how you know how to determine profit taking from crashes. And then let's look at crypto, Bitcoin specifically. And there is your crash in Bitcoin versus prior to that, you've had some corrections and you've had some profit taking along the way. There is your July 2019, July 2019, where we had a little bit of a downtrend, but we were back off to the races and looking like we were trending up again towards the bull market before that March 2020. So those are the things to keep an eye out for and to watch out for. We have the Delta variant out there. We have Afghanistan. We have China, Taiwan issues. We have inflation, and we have the Fed having to step in and pulled the foot off the gas in light of everything. But if things start to look bad from an economic standpoint, the Fed's just going to step back in, and we're going to continue status quo and continue pumping up the economy. And that's what you got to remember. A lot of these moves, it's all about the liquidity that's been pumped into the market. Very little to do with overall fundamentals. It's mostly the liquidity and leverage that's been pumped into the market. And that's why we saw it drop, because when the liquidity stopped, when the leverage was liquidated out of the market, it dropped, and it hasn't come back in at scale right now. So that's one thing from a fundamental standpoint to look at, is we don't have a whole lot of leverage in the market from a retail standpoint like we had before. There's a lot of leverage in the market here from an institutional standpoint. From a corporate standpoint, Michael Saylor, leveraging his company to buy Bitcoin. So there's still a lot of leverage in the market from that sense, but there's not a whole lot of leverage from the general public retail standpoint from all the exchanges like we saw before. So that's a primer that could potentially be a catalyst to launch the market. If we get over 50,000 and close above 50,000, that could be something that could launch the market back into the stratosphere if retail jumps back in and starts leveraging. So we'll have to see if that happens this time. We'll have to see if people are willing to take that chance and that gamble, and if there's enough new people coming to the market to make that happen. Until then, what we're waiting on for real gains in Bitcoin specifically is institutional adoption, and they're waiting on the regulatory environment to settle in. They need guidance. They need tax clarification. They need understanding of what's going to be required, corporate governance, things like that. So that's what's really holding up large institutional adoption at scale. But we do have private companies coming in and participating in the markets. So until we get that clearance and that guidance, we can't really expect a whole lot of exponential growth quickly. And, ETFs and things like that. So that looks like that's going to be next year for any kind of ETFs, end of 2022, potentially into 2023, things like that, before we can see significant broad scale adoption from an institutional standpoint. But they are getting ready. They're setting up their desks. They're providing exposure through futures and options, which is generating a lot of this volatility in the markets. So exciting times ahead. The fundamentals are strong. I think the bottom right now is in at 28,000. I think the top, I don't know where that can go this year. We'll have to wait and see. Nobody knows whether that's 100,000, whether it's 125, or whether it's 65. We just don't know. We're going to have to wait and see what the fundamentals are. So I hope that helps, and I hope that gives you some stuff to look at and think about as we continue on with the market. It's going to be a lot of fun this weekend to watch the price and see if we can get above 55 or get above 50 and hold, or whether we dance around in that 47 to 49, 45 to 49 range sideways for a while the Bitcoin price tries to figure itself out and discover where the real upside is. Until then, I will see you on the next video.